Hello, followers of the 4-Year Journey. This is Bob Lucas here on April 28th, 2022. I hope you're doing well. Here's another video on the 4-Year Journey. It's been a long 2.5 months since the last video. I apologize for the delay in getting one out. Haven't got too much to talk about here. A couple of key points I really want to hit on and spend more of a time discussing those points than drawing this out really unnecessarily. I want to talk briefly about sort of how we got here and the fact that I think now the top is certainly in for this 4-year cycle. Therefore, in that case, I want to focus also on what the remainder of the 4-year cycle might look like, what a bottom might look like, and how we now should play this remainder of the cycle going forward, and a look at the model portfolio. It hasn't unfolded from an exit standpoint as I would have hoped. I know that's the case for almost everybody in this space. Almost anybody who was bullish on Bitcoin over the last 2, 3, or 4 years, I think unanimously would state that we were looking for a move into the 6-figure range and beyond. We haven't gotten that, of course, and now we're dealing with what I believe is a period of declining phase in the 4-year cycle in preparation for the next 4-year cycle to begin. So I want to first just take us back. I did cover a lot of this in the last video that I published 2.5 months ago, although in that video 2.5 months ago, I left the door fairly wide open for the idea that we could see a nice rally to all-time highs into the summer months for a peak in the 4-year cycle. If you recall, that video was pretty much here on this green candle. This decline down here to take out the 10-month and close below the 10-month moving average mostly flipped me into the idea that the 4-year cycle had peaked, at least higher than a 50% probability that that was the case. Since that time, the failure to really come up and launch, which it needed to do relatively quickly because of the amount of time that remained in this cycle, hasn't really unfolded, and especially over the last kind of 4 weeks or 5 weeks, coming back and really staying below this 10-month moving average this deep into the 4-year cycle is pretty much the nail on the coffin for any idea that we're going to come up and still make a higher high. So the way I see this now, we have a month 34 high, which is basically at the 3-year mark. Technically, the cycle high is back here in April of 2021. This was the run that had the most of the sort of mania sentiment that you would see. Technically, from an on-chain perspective as well, that really was the beginning of the Great Unwind here. We only made really a 3.5x extension from the 2017 highs, and that I talked about last time really was kind of a premature peak, at least when you look at it from prior cycle peaks and mania peaks that we've seen in Bitcoin. This one had a component of mania in it, but it wasn't anything like a mania blow off top that you would think or that we all expected in any 4-year cycle. From a timing standpoint though, which I think really was what the journey was from the beginning, a move up to this sort of 34, 36 month high, the 3-year high, was really what we were looking for. What did not allow me really to exit at the top, and that's just being as open and as blunt as possible, was the fact that we didn't really see an extension that I thought was worthy of a 4-year cycle high, and at least what prior cycles had given us, and the failure to make a significant run to the $100,000 range and above in this timing band, in this window around the 3-year mark, was really the catalyst for not being able to sort of get out of position. As you know from the last video, I did get out of some of the position at 43,000, I think it's 43,800, to cash in and essentially bank some really good profits, mostly pretty much a 10x move from getting in and where the first video was published 3.5 years ago. I felt that that was very important to do at this point because of the likelihood of a 4-year cycle high in place. And I wanted to be able to get some good value for the Bitcoin that I put to work, or the capital I put to work back here in December of 2018. So we have a cycle here that has been really consolidating or in a declining phase for many months now, and could argue over a year or almost a year since the April 21 peak. There has been the selling in the cycle that has seen the cycle enter into the declining phase. There are macro events that may explain this. For example, China and China's exit or clampdown being one of them. There are multiple reasons. The Fed's risk-off strategy of trying to tame inflation, for example, running off their balance sheet or beginning a phase of increasing rates certainly does not help a market like Bitcoin, which is still in a phase of attracting institutional funds, a risk-on sort of thing, where it got caught up in sort of this risk-off environment that's been unfolding over the last 6 months or so. That's where we stand today. Currently, Bitcoin's price is hanging off the bottom of a 10-month moving average. Typically, that it does not occur, certainly not late in a cycle if we're in a bull phase. That's just the reality. We're in a bear phase. The trend, as you can see here in the rising trend, you're comfortably above the 10-month moving average, and you're comfortably hitting the upper Bollinger Bands. Now we're not doing that, and we are in danger, at least, of dropping much further as the cycle begins to come into the end phase, which is scheduled towards the end of this year, around the December 2022 timeframe. So we're getting relatively close already to the next cycle low. And I think the way the on-chain metrics are shaping up, with a lot of Bitcoin being moved off exchange, some of the whales that are accumulating. Also, the miner profile has significantly changed in this cycle. We had most of the concentration in miners being abroad in Asia, and I believe they were more about cashing in on their Bitcoin, certainly around cycle highs. And then you saw collapse in the hash rate. We're not seeing collapse in the hash rate. If anything, we're seeing all-time highs. We're seeing a lot of capital into mining in the US, and their strategy looks to be more about raising debt to fund the infrastructure and then to accumulate Bitcoin for the longer term, and not play it from more of a short-term angle like the Chinese miners, I think, were doing. And that put a lot of pressure in the past on price. So I think that's also a big play here on why we possibly may not be seeing coming up a significant decline in Bitcoin into the 4-year cycle low. Just to put this top in a little more context, I found a chart here on my saved trading view that I presented really early on in one of the videos. I'm not sure exactly when, but it was very, very early, sort of outlining the possible path here in the 4-year cycle. And I just want to show this because this is more about time than it is price. And I've always talked about price really taking or possibly taking almost any path into the cycle. The most important thing to take away from the 4-year cycle was mostly that in a secular bull market, it's basically 3 steps forward, 1 step back. So 3 years forward, 1 step back is the profile, and that's the profile we've seen in the past. And we got something very similar here in this cycle, where we really topped on month 34, right where prior, I think it was a week 150 or week 148, and we've seen prior cycles peak at 142 and 152 weeks, which is around, again, that 3-year mark. So we had really the same type of cycle that unfolded this time. The difference here, of course, again, was that the move beyond the prior 4-year cycle peak to this peak really didn't do it justice, or at least didn't mirror prior cycles. And yes, you do get obviously diminishing returns from cycle to cycle as market cap rises into more significant levels. It was natural to expect less of a move from an extension of one 4-year cycle peak to the next 4-year cycle peak. And that was really factored in when I first thought about getting up to the $150,000, $200,000 range. That was still going to be sort of less than a 10x move, whereas prior moves did more than that. And of course, ones before that did even more. So diminishing returns were factored in, but a return of just 3.5x from the prior cycle really just didn't fit my expectation. And then going back again to that monthly chart here with the breakdown, it really was difficult to get out of it or cash into a position here so early in the 4-year cycle. This was well before the 3-year cycle peak or the 3-year cycle time frame. And this pullback here after a 5-month move was a natural move back. The market was just far too extended here in the short and intermediate time frame. So pullback was acceptable in a move that would continue higher into a 4-year cycle peak. It didn't close below the 10-month moving average. Then you made a higher high right here. So it looked as if we could see a month 36, 37, 38 run to a peak to complete the 4-year cycle. And it really wasn't until it turned down here and closed below that 10-month moving average that it became a lot clearer that perhaps the peak was in. And again, that's the reason why I chose to remove some of that long and cash in that position on that second or that real close of that 10-month moving average. And so far, I think, given what what we had unfold in real time, that's probably about as best as you could do, given again the extension that just didn't unfold in the 4-year cycle. But going back to this chart, this is a weekly. So we've had now a 3-year run to a peak, and it looks as if the peak is in. And now it's a question of, well, what does the bottom look like? Okay, so this is how we got here. I'm saying the top is in. Is the top in for sure? Of course, nobody knows. I certainly don't want to tell you that. I'm telling you 100% the top is in for 2022. But I think it is. And I'll have at least some thoughts in the model portfolio strategy on just in case that's wrong. And just in case that for whatever reason, we get a very early 4-year cycle or it gets aborted. Any multiple scenarios that to me, I think are unlikely, but are always on the table. I'll have some thoughts on what that might look like. So how does this now unfold given that I believe the 4-year cycle is in? Well, one thing I think that works kind of in reverse to the idea that we didn't get sort of a mania blow off top is that the mania blow off top, and I've talked about the true big blow off really coming in the next 4-year cycle. I've been very consistent on that from the beginning of the videos that this blow off in the 4-year cycle would still be surpassed by an even larger or bigger 4-year cycle peak in the next cycle. That still holds true, and I believe the absence of a mania, a worldwide mania peak here in 2021 and this 4-year cycle is really setting up for the foundation for the next big 4-year cycle run and to a massive mania peak that I believe leads to a significant secular bear market and the first true secular bear market of Bitcoin. That is for the future. That's for 2024, 25, and 26, in my opinion, possibly more 25, 26. So quite a ways away. I still believe we have a move here that is going to be more than life-changing, and we want to be in position for that. But again, just going back to the fact that we only had a 3.5x extension from the 2017 highs and the absence of that mania blow off top, I believe means that on the downside, that the downside is limited. I think we don't see or should expect the kind of declines we've seen in prior cycles where we saw, in this case, I believe was an 85 or 86% decline from peak to trough. And then in the prior cycle, I think this one was closer to 90% decline in the 4-year cycle. The fact that the pendulum didn't swing as much to the one extreme means that the pendulum, I believe, will not swing down or back the other way into the 4-year cycle low. There's also a maturity concept here as the asset class grows and the market cap grows and more sophisticated or larger and deeper pockets become and come into the market. I think that will begin to sort of bring in some of that long-range volatility that we've seen in the past. Therefore, I believe the lows that we saw back in June here at the $29,000 and $30,000 level, I'm not sure if they hold necessarily, but I believe any action that occurs below that $30,000 level will be short-lived. I don't believe you would see a monthly close in that level, and you may only see a week or two of a weekly close at that level. Does that happen now over the next month or so? Possibly. But I think what we should be looking more at is this November to December time frame for the end of the cycle, and where the most risk of a capitulation could occur. And it could just be, again, a very short-lived, significant shakeout before the beginning of the next 4-year cycle. So I don't have an absolute path into that 4-year cycle. What I believe with more conviction is that we're going to remain mostly range bound for the remainder of this year, with most of that price action occurring below the midpoint of this range. So if you look at the high levels around 65 to 68 and the low levels around 30, then you kind of get a mid-range around the $45,000, $47,000 range, in that vicinity at least. And I believe most of the price action over the coming months into the 4-year cycle low will occur in that bottom half, with possible wicks down to test that $30,000 level, or possibly, like I said, some capitulation events that maybe gets it down to 27, 25. I don't know exactly. Predicting price in a capitulation or sell-off is next to impossible to do, and it's really not worth the exercise. The point is, though, I believe we can get events down to that point, and we should be at least prepared for those. What I do think we will see, though, between now and the end of the 4-year cycle is one type of counter trend or one rally at some point, whether it comes after a dip in the next few weeks down to the low 30s and then come back up. I do believe we'll get a run back up towards the 47, 48, 50, maybe even 52, 53,000 level. That could be a late spring, maybe a summer rally. I think we'll get something like that. It just stands to reason that we'll get that. But what I think we'll see is the highs start to get lower, and we'll start to get significant support build up between this 30 and 37 or 30 and $40,000 range. And it's in that range there where I don't think anybody should be doing anything with their long-term allocations, should not be considering any type of selling below that $40,000 level. I think that's a level for long-term accumulation and not panic selling for whatever you do. If you've been loaded up from the beginning and have a significant position, you may want to begin to realize some of that in the $40,000 range or so. I'm not saying get out, and I'll talk about strategy right in a few minutes here. But yes, just to kind of finish up on how this cycle may end or unfold, multiple paths. The one really is we sort of get a move down. Again, we get that sort of rally back up, and then we kind of come down here, hit this level a couple of times, maybe drop one time below that 30,000 and catapult out and begin to make that run up here. And then we're off in the next 4-year cycle that will begin in 2023. Another path, again, it's really irrelevant to long-term holders. One bullish path would be that we mostly just sort of hold in a very, very tight range, sort of between 40 and 50,000, of course, with wicks on either end of that, but mostly really, really bring in the bands here and get really tight and create this real squeeze here as the 4-year cycle ends, essentially meaning that all the selling pressure just continues to get absorbed in this 40,000, low 40,000, high $30,000 range, creating this event, this volatility event that springboards. And then what that would mean is we'll get a time-based cycle low. So this entire period from the April 2021 highs all the way into the December timeframe. So a year and a half of mostly sideways consolidation and reaccumulation that's probably already beginning to occur. And then once all that selling pressure from that prior cycle has ended, the beginning of the next cycle to occur. Again, doesn't really matter so much from a strategy standpoint, but these are multiple paths. Is there a path where this goes up and makes a new high and makes me look like a fool? Yes, there is. There always is. I'm the first to admit it, I always have from the beginning. The market can and will do some crazy things. No strategy is ever close to perfect. And I'm more than capable of saying, well, shit, I was wrong on that piece there. And having a strategy to at least take advantage or not be left behind will be important, which leads me really into kind of the last play here, which is, how do you play this? What do you do? Well, let's talk about quickly the 4-year journey model portfolio. So on the portfolio, 25 BTC was purchased obviously in the beginning at a price of 4,000. It was actually less than that, but because the video came out, it was at 4,000. That's the price we set at. 2 other buys here, some good ones at 9,000 and at 4,000. The first sell at 28,000 was just to recover most of the initial outlay, and then the 10 BTC of the 30 that remained at 43,800 was again because of the breakdown here at that 10-month moving average and the sign that we had a good chance that a top in the 4-year cycle would come. It made sense to me to realize a 10x profit at that point, because at that point there was no telling whether or not the floor would just completely come out of Bitcoin and that Bitcoin could drop to a $20,000 price or below. That's still possible, but I wanted to at least get enough off the table where I felt, given that the 4-year cycle didn't peak to a 6-figure number, that I still managed to take some really handsome and some really good profits from this cycle. And that really was what that 10 BTC sale in the model portfolio was all about. What about the rest? The BTC model portfolio has 20 BTC left at a portfolio value of 800,000. What do you do here? Well, here's my thinking on this. It's too late now in the cycle to begin to try or begin to sell at lower levels. Yes, you could make an argument that if it gets below 30,000, that we're heading much lower, and that's possible. But at that point, it just doesn't make any sense to me to be selling at a 58% decline from the peak, 39, 40 months into a 48-month cycle. It doesn't make sense at that level. I may as well sell it all here and then wait, right? Cash in, come out with a really significant gain, more than a 10x gain on every 100,000 allocated. It doesn't make sense to me to do that. So the way to play this is, if we're thinking that, and I think this is mostly, at least for people watching this, mostly a universal belief that Bitcoin's great days ahead, and that Bitcoin is going to see a big 6-figure number at some point in the next 4-year cycle. If that's the case, then I think it makes sense to marry the 2 cycles together now from a portfolio strategy. Doesn't mean I wouldn't cash some out, and I will if we get higher, but I won't be capitulating, or won't be at least selling more of the portfolio now that the 10 BTC has been the profit for the cycle. The 5 BTC was the recapture of the initial outlay and the investment. The rest, I think, does not deserve to be sold at anything below the $40,000 level. So I'll take the position that if Bitcoin drops to 30 or 28 or 27, that we're closer to the bottom, and that we're getting close to the timing band for the beginning of the next 4-year cycle, where it just would be crazy to sell at 27, 28, 30,000, hope to get a much lower price. It just wouldn't make any sense at that point. So I will be holding the remainder of the 20 BTC, regardless of where it goes between now and the end of the 4-year cycle, and regardless of how low it goes. If it goes to 18, if it goes to 20, some crazy numbers down there. For me, I've already captured my initial outlay. I've already taken a $400,000 profit on every $100,000 invested. I'm more than happy. Would I have been much more happier with, of course, a $150,000 price and selling it all? Yes, that goes without saying. But I will not be selling it down at that bottom level. If anything, if we get down to that level, I'll be looking to allocate a lot more of my capital back into Bitcoin at those lower levels. So in some ways, I wouldn't mind a churn sideways and a drop into the 4-year cycle and pick up a much larger and significant position, because the goal of the journey, and people say, well, why? And people have always said, why are you selling any? You know, Bitcoin's going to $1 million, or it's going to 500,000. The goal has always been, of course, to get in and out during the 4-year cycles to accumulate more Bitcoin. So that's been the goal of getting some of that out, really to be able to redeploy at a much lower price. Try and time these ebb and flows of the markets as best as possible. So what I have put in here on the model portfolio is one more target to sell 12.75 of the remaining 20 Bitcoin, but only if it gets up to 48,000. That's the condition. I will not sell below that. I will not sell it here. At 48,000 over the next few months, if we can get up to that point right there, that's near the mid-range of this. That's the mid-range of this last sort of 1 year range that we've seen. At that point, I feel a lot more confident in the idea that it's just a counter trend move. It's a rally that gets rejected here over the summer months, and that we will see a trip back down into the low 30s, and then possibly, as I stated, a move into the $20,000 range for a brief period of time. So I'd be interested in cashing out more of my position at that point to bank some more profit, but also to bank profit to capture Bitcoin at a 30 to 40% discount towards the end of the 4-year cycle. However, what I won't do is I won't cash out 8.25 Bitcoin from this investment. I will keep that regardless of what happens. And for two reasons. One is I can't predict the future. No model is perfect. If we do get a run up and start making a run to the highs, I want exposure. I want exposure to that move, and I want to have a position where I'm not completely out and FOMOing or making the wrong decisions at the wrong time. That will at least keep me a little more grounded with my position in an 8.25 Bitcoin at that level. Of course, I'm talking for a $100,000 allocation here from a model standpoint, is still a decent amount of exposure to this market. So I'll keep the 8.25 now into a bear market low or into a run up to highs. If we do get some type of surprise run up to this point, then I may have to redeploy more capital at higher points. Maybe a run up here to a new all-time high and a pullback. The pullback would be a reason then to get and redeploy at a higher level. And that would cost some, yes, of course, that's the price of trying to play some type of timing in any market. Okay, it doesn't always go your way. So any move up here would see me run with 8.25 of the original 25 Bitcoin, and then I would have to assess the market at that point to see what it could be doing. These are my preferred paths, and again, a move into the 48,000 level reduces the remainder of the position, and then the goal will be for the remainder of this cycle is looking at a move down into the 4-year cycle low in preparation for getting back into an absolutely full position for the beginning of the next 4-year cycle. So that brings a wrap to what has been a shorter video than normal. I want to thank you for being on this journey to date. I know in the end, 3.5 years worth of talking about some really big possibilities haven't exactly unfolded, but I think it's safe to say that following so far, at least to this point, has been very beneficial, I have to admit. I think the best is certainly yet to come. I think this journey, obviously, as I've said before, is more than just 4 years. It's 4 years at a time. I think we're going to have some really big opportunities still ahead, just as we did back in December of 2018. I think we have maybe some difficult times to navigate, but part of this active HODL or Bitcoin journey has always been about really sitting on your hands a lot and letting the market and letting Bitcoin take us higher overall, and making as few changes possible, but trying to make the right changes and the right moves at the right time to really extract the most value out of Bitcoin and its Bitcoin cycle moves over the 4-year periods. Lastly, no definitive information yet. Exploring the idea of some type of 4-year journey community, whether it's some type of group Discord that we can all get on and start to talk about long term. Just an idea, a thought that I have. Look out for possibly more information to come. If you like these videos and you'd like to see or hear more active commentary on a day-to-day or week-to-week basis, and maybe some more ideas on when to buy and sell, I'm at Bitcoin Live. So it's bitcoin.live is for more on my more frequent updates on the Bitcoin cycles, including the 60-day cycle time frame. Wishing you all the best. Thanks again. Do appreciate you very much. All the best. Take care.